FBN Capital's Purchasing Managers Index jumped to 66 in November from a reading of 52.8 in October, showing all 5 sub-indices in the positive territory. Now, for more on this report, I am joined on the line from London by Gregory Cranston. He's an economist at FBN Capital. Gregory, it's great to have you on the show. First of all, tell us what has driven the headline index to a new high.
Right. Well, what's happened is this is very high reading, undoubtedly, and the change basically has been marked by much higher sub-readings for output and new orders. But more significantly, though, on the output side, if you take the larger companies, we have a sample in our index. If you take the larger companies, 80% of the larger companies reported higher output. Now, these are companies that are less affected by the usual operating challenges. So if this was to be sustained over 1-2 months, then we have quite a major sea change staring in front of us.
Do you think that it's sustainable, though?
Well, I'm a little skeptical, but there are two good reasons why we've come up so strongly here, and one of course is it's the build up to the end of year festivities in the country. So there, especially on the consumer goods sides, you do have a strong pickup in output. And the other reason, of course, is that although the official data lags PMI the world over, which is the great sort of merit of the PMI, but if you go back to Q3 national accounts, you actually see a pickup in manufacturing growth to over 8.2%.
Let's talk about the new order sub-index. We saw that go from 49 to 75. Do you think that this is something that we can expect to see happen again this month, December?
Well, I mean, I would suspect that from January or maybe even December, we'll see some of these sub-indices come off. I mean, for the reason. I mean, formally, our index is not seasonally adjusted. Not formally, it's not. Although the respondents are asked to take seasonal factors into consideration. So, you'd expect, therefore, November to be a strong month in the calendar year.
So, I mean, do you tend to find that the output sub-index and the new order sub-index are really the two sub-indices that sort of drive the PMI? The others not as much of importance?
This time around, certainly. I mean, in the previous months, of course, we only launched in April, but previous months, the swings have really been accounted for by the two sub-indices, which are most governed by the operating factors. And those are delivery times and purchases, stocks of purchases. Operating factors being, fuel access, finance access, electricity access, whatever.
So tell us what happened with that index this time. You mentioned the delivery times one. So tell us what happened with that. Why didn't that sort of move the PMI much this time?
Well, I think probably what happened is that for the smaller companies, there were the recurring operating difficulties.
Now, go on.
But less so for larger companies, which is why you had such a good reading for output.
When do you think you'll start to identify long-term trends? I mean, this is your 8th reading now.
Yeah, absolutely. Well, I think, we should wait for a full year. I mean, of course, we can always happy to give our market hunch, but for a full year's data, I think, and then plus the introduction of seasonal adjustments, which we would probably plan to do for the 1-year anniversary.
I see. Gregory, thank you for sharing that with us. That's Gregory Cranston. He's an economist at FBN Capital.